Afternoon everyone. I really enjoyed the last live video that I did on here a few days ago. I think it was perhaps earlier this week. So I've decided to take the risk and go for it again rather than pre-make another like studio style video. Early caveats then. It's nice right now, but this is the north of Scotland and it's not forced to be indefinitely. So we might have to cut short if the weather does what it does up here and comes in quite suddenly. And although it's quite a quiet space where I am, we're also out and about in the public, and so of course anything can happen in that regard, can't it? Today I want to talk about crypto. Clearly we're at the weekend, it's Sunday afternoon, just coming up for 4 o'clock where I am, and in the crypto space in particular, the markets never sleep. Unlike stocks, which close, depending on what market you're following, tea time early evening on a Friday, crypto trades 24/7, 365 days a year. Now, crypto, everyone will have a really strong position on where these asset classes fall, right? For some people, it is the future, it is game-changing, it's everything that we should be getting into and more. Other people see it as somewhere between a scam and really sophisticated forms of gambling. In the interest of transparency, I don't personally hold any crypto holdings right now. I have in the past, and I got out of those a few months ago for reasons that aren't really relevant for this. I'm just kind of going through some more general portfolio balancing, and I absolutely plan to hold crypto token assets again in the future, but I don't right now. Clearly at the moment, if you're looking at the stock market context, most markets are doing really, really well. All-time highs or there or thereabouts are all-time highs for the vast majority of them. And crypto in particular is getting a little bit of criticism or stick, rightly or wrongly, for seemingly lagging behind the stocks. And I just wanted to explore in I guess part one of this video, my take on what's happening in the stock market space, because if my theory is correct, that will translate into what happens in the crypto space more broadly over the next few months. So as we know, about 6-8 weeks ago, I think it was there or thereabouts the back end of February, you had the Middle East crisis, whereby American military action in and around Iran and all the fallout that kind of fell from that caused and is still causing massive issues with respect to the oil market. Now, as a result of this goings on, we saw a massive stock market correction. I say massive, that's probably a little bit of overkill actually. Somewhere between a 10 and 20% correction. So a significant enough correction that people felt it, and clearly if you were holding particular stocks that were perhaps at the more extreme end of the risk curve, you were going to feel that more than people that were on more safe haven holdings and index funds. But broadly speaking, we saw a market correction, and that was because of the uncertainty that was being created at the time. Clearly the Strait of Hormuz is a global shipping lane and it's a really important one, but most importantly with respect to Hormuz, it plays a really important role in the supply of things like oil and natural gas in and out of that part of the world, and clearly then has a broader knock-on effect to global supply. Markets corrected, and since then we've started and ended the conflict a number of different times, and we've seen the stock market recover and actually push on to what at the moment, like I said, are there or thereabouts these all-time highs. Interestingly, it would almost appear then to the casual observer that the markets are behaving in a way that is completely disconnected, from the global oil market and the other factors that are going on geopolitically in and around the Middle East and Europe. And therefore you might begin to think that actually it doesn't really matter and we're on to a winner here with respect to the stock market, and it's going to keep going forever and a day. Now, again, my position differs ever so slightly on that. And again, for context, what is my broader position with respect to the stock market? For the last 50, 60 years or more, we have seen markets historically continue to trend upwards. And I am a personal believer that the stock market is perhaps the greatest wealth creation device that has ever and probably will continue to exist for some time. So I am very bullish more broadly, I am very pro stock market, and I'm very pro wealth creation. But I like to look at these things from a slightly longer lens than what a lot of people are currently doing on social media, perhaps. So on a personal note, yes, we've seen some all-time highs, but I'm not convinced that's telling us the full picture. What do I mean by that? Clearly, irrespective of where you live at the moment, the oil market is having a massive impact on you in some way or another. Whether that's fuel prices, we live in Britain, it is absolutely outrageous, the cost of filling your car up at the moment. I'm in touch with a lot of people on social media that are in the USA. They're feeling it in a slightly different way. There are companies and airliners that are running out of jet fuel and all this other stuff. That's going to continue to go on, I would suspect, until this crisis solves itself, and for a number of months thereafter, because of the way shipping works. It takes a long time, clearly, to move these assets around the world, and then we also have to repair the damage that's been done militarily. So although we are seeing stock market highs, Nathan's personal view is that's perhaps a short-term measure, and I would not be surprised if we didn't see, and I'm not talking massive, drastic, Great Depression level crashes, a steady downward trend in the market, perhaps later in the year, as the reality of these issues with respect to oil, because whether we like it or not, we need it for transport, we need it for distribution, manufacturing, construction. Oil is everywhere, whether we like it or not, and that's, again, that's not about environmental policy, that's about reality. Right now we're using a lot of it. The knock-on effects of the squeeze on oil are going to eventually work their way through into consumers and businesses, which will likely suck liquidity out of the economy. And what do you do when you're short for cash and you're sat on massive profits from your stock market, which has probably got a little bit of FOMO cooked in there as well? You're going to take some of that profit off the table, and we're going to see a slight reset in the stocks. My own take is that that's a very short-term measure, but I expect on a personal level to see that play out over the next few months. So think about crypto then, in respect to what we're talking about today. Crypto is a really extreme asset, right? And we've already said that it's controversial, and not everyone thinks it's a good thing. I personally do, but I don't hold any at the moment. And I would imagine that there are people on here now that have got very strong positions either way. But when we think about what impacts on crypto's price action, the two things that jump out to me really are two. You have liquidity in terms of amount of money moving around the global markets, and you have sentiment. And when you have both really good sentiment and high levels of liquidity, and if you were to map this over with charts, it would show you something very similar to this, you tend to see quite a lot of positive price action in the crypto space. But because it is a asset class that depends on that liquidity and sentiment, it's also generally one of, if not the first, to see the drastic and hard corrections as liquidity or sentiment starts to come out of the global markets, and you see these price corrections that we do. So when we think back then to around October, I think it was October the 10th last year, prior to that, anyone that had got into the crypto space over the last year, 18 months, would have very much thought they were on a one-way ticket. Prices were broadly, unless you're in the meme space, and I'll come on to that in a moment, generally trending upwards quite significantly. And even after holding for only a relatively short period of time, you were comfortably making, double-digit returns on most of the assets that you were buying, be that Bitcoin, Ethereum had a bit of a long winter, and then it bounced back and pretty much gained everything that it had lost, and then some. And Solana went from, I think it was the high 80s to something along the lines of the high 200s mark in terms of US dollars per token. All that happened over that space of 2024, 2025. And they're not the only ones. There were lots of others, but you get the general trend here. And then, for lots of different reasons, October 10th started the beginning of a real dark crypto winter for a lot of people that had got into that over the last year or so, particularly if you were buying on leverage. And we saw massive crashes in price action. And today I went on and checked earlier, before I came out to do this video, a number of major tokens still sitting comfortably at double-digit losses from where they were this time last year, or even 6-8 months ago, before the October downward trend. Solana, Sui, and others all comfortably sat around 50% market losses. So with the geopolitical context that I've just spoken about with respect to stocks then, perhaps there is an argument that the crypto market is pricing this action in and these liquidity issues in slightly better than stocks are right now. Maybe we'll never know. You know, crypto's a really strange space, and there's no one factor influences it. And even though they're all up roughly, or a lot of the major tokens are all up roughly 5 to 10% on this time last month, we are still well below these all-time highs that you're currently seeing in the stock market. And I can't help but wonder if, as we start to see more global liquidity squeezes, if my theory plays out throughout 2026, we see another slight downward correction before it continues to trend upwards as and when global macroeconomic conditions recover. Crypto typically, I would suggest, on that premise, being the last to benefit, but perhaps with the highest upside with respect to when that price action starts to happen. So on that then, particularly in the context of American politics, you have an American president who is clearly very pro-crypto. There's lots of discussion about whether things like the Clarity Act and others will pass and what that will do to the cryptocurrency market. But he's also shifted his position over the years from being right out at this edge of things saying, hey, crypto's pretty much a scam and nothing else other than that. And then you go to this end of the spectrum where now we're floating coins or tokens in the name of the President, First Lady and so on. So this is why you've got to think really carefully about what you're going to do when you come to buying crypto assets. I'm sorry that you might hear a little bit of noise. We've got some kayakers coming past. I'm actually sat by a river, which is beautiful. I've got some folk on a kayak. So things like your Bitcoin, your Ethereum, Solana, the more household names in these tokens are the ones that tend to perform best earliest. Oh, a few more coming past now. They tend to perform well earlier on because they're more household names. There's more market cap in those assets, and we like the price movement in terms of you can pretty much, with a reasonable degree of accuracy, forecast the way that it's going to go. And by that, I don't mean down to the dollar. I'm talking very general bracketing of price action. But a lot of these bigger tokens are ones that we can all sit here and look at now and say, I think I understand what that token is and what it does. Bitcoin, you know, and I'm speaking very generally here, don't shoot me down in any comments or DMs afterwards. Broadly speaking, transitioning into a store of value type asset. Question, will it overtake gold as the new digital global store of value or not? But broadly speaking, that's the function that it does. I know it's not what it was designed to do, but that's the function it does now. Ethereum offers the smart contracting solutions, and people are building their networks on ETH. XRP and others do other stuff. So there's a function to those tokens. But the function around some of these more meme type tokens is very, very different. And so clearly there is a vast fortune to be made in meme tokens if you get the timing right and you get the right token. But broadly speaking, you're left holding the bag. And what do I mean by that? And that's a very interesting point that I want to elaborate on. Anyone that's been online and checked will be noting that things like the Trump tokens and the Melania tokens in particular are very, very close to 100% losses, or certainly thereabouts, high 90s in a lot of instances, from where they were when they first both floated and then their all-time highs, which took place not long after that. But you've got to remember, when you're trading on these tokens, the vast majority end up going to zero or thereabouts to zero within either days, months, weeks, whatever. The general trend for the vast majority of them is downwards, with the odd exception. But why is that? There is an argument out there at the moment that the floating of a cryptocurrency type token is essentially the new form of venture capital. So I might be a business, for example, and I want to raise some funds, or a brand or an institution that wants to raise some money. In the past, I might have gone to private investors or venture capital type companies, sold out a stake. They would have injected that cash and we would have bought it back later, or whatever arrangement we'd have come to would have happened. But a lot of these companies now, with the correct FCA regulation, or whichever regulation it is relative to the country that they're operating in, and some are more stringent than others, by the way, can essentially float these tokens and pump these tokens out on the public market as a way of capital raising. Very, very similar to what happens at IPO, right? So the difference here, however, is that if I'm the chief executive of this company, I don't retain a corporate responsibility for the overall price direction of the token. Unlike, the share prices, where I still bear that corporate responsibility post-flotation at IPO. So you are coming in there as the retail investor, you're buying all these tokens from me, I'm offloading as much as I can, probably in tranches, with a really good PR campaign in the right space to lift the price, generate some hype, and then I want to get out and I want to sell as much as possible at the best possible price. Reality then, what happens, doesn't really matter as far as I'm concerned. It's over to you guys as the retail and institutional investors that have bought this stuff to buy and sell it as you see fit. Noting that in the vast majority of instances, it makes no correlation whatsoever with the performance of my business. It's just a token that's out there and you're going to buy and sell it for whatever price you deem it necessary. But ultimately, unless you can get in and out at the right time, you are just carrying the bag for someone like a large organisation or an institution that has floated the coin, raised as much cash as it possibly can, and it's now walking away into hell with what the coin does for the rest of the time. So, going back to what I was saying a moment ago, that very much feels like in the Trump and Melania coin cases, something very, very similar to what's happened. Now, clearly, who am I to say to the American administration what they are and are not doing in terms of capital raising, but it certainly has a feel like that is what is happening, not just in those particular token instances, but when you go and buy a lot of this other stuff, you'll generally see it'll float. You may or may not get some instant price action, but at some point something will catch on. You'll get a real pump on the stock, or sorry, on the token, and after a while, rug gets pulled, goes to there or there about zero. You've got winners and you've got losers, and unfortunately, it's usually the poor sods that come in lastminute.com thinking they're going to make a few quid for whatever reason they want to make it, usually very genuinely, that get left holding the bag for a token that is actually not ever going to be worth anything to them. So, to wrap that up and to close it off then, what am I saying? Really interesting time at the moment to be in the investing space. There is always opportunity out there, but it's about understanding what you're getting into, about understanding what the value is of the stock or the asset that you're buying, particularly in the crypto space, understanding the factors that are likely to influence its performance, and then aligning those factors with your own personal goals, how much money you can afford to put in there, your risk tolerance levels, and all those other things. I think we've still got a lot more volatility to come, both in the stock and the crypto space, but it's a really exciting time to be in there and seeing what's happening. Fortunately for me right now, I'm kind of sat on the sidelines waiting to jump in there at a time that's more right for me, but I know there'll be people watching this either live or later on recording that will have a real vested interest in the performance of the crypto market in particular. So really grateful to hear your thoughts. I love reading the comments and the DMs that follow on after this. It helps keep this really engaging. I hope you found that useful as a bit of an explainer into my own thesis in what's going on with respect to global markets, liquidity, short to medium term price action. Longer term, I still remain very bullish. I think there's going to be a lot of wealth created both in the stock and the crypto market spaces, but you've got to get behind the right stuff and you've got to understand what you're buying and make sure that your time horizon and your capital allocation and your risk appetite are all aligned to where you think they need to be relative to where the market is performing. Don't get caught with your pants down holding the bags for some venture capitalist or institution that's making a few million quid on the quick. Buy something that you understand and something that you can comfortably explain, and sleep at night knowing that your hopes, dreams, aspirations are all tied up in that token or those stocks, and it makes sense to you in a logical way where they're going. To quote Charlie Munger, you don't have to swing at every pitch that comes your way. You've got to make sure the right one comes along, or sorry, you've got to wait for the right one to come along, and when it does, you've got to make a really good clean connection with the bat. And if you do that, I'm sure the returns will be worth the wait. Hope you enjoyed the video, guys. Take care. Have a great rest of your weekend, whatever you get up to. Let me know what you think in the comments. Look forward to hearing from you soon. I'll write an article about this, get it out there next week for those people that enjoy perhaps a slower time read, but hope you found the video useful, even if we did get slightly disturbed by some rogue canoeists. Take care.